Hey, welcome back to another AutoTrend System trade review video. In this video, I want to show you a little bit about how I trade futures with this system. Basically, the strategy is the same, but some characteristics are a little bit different when it comes to futures. So I have here two recent examples from our futures trading. One is on the Russel 2000, the one that you can see here on the 30-minute chart. And I'm going to show you another one on gold futures just after. So let's take it from the beginning. If you've watched a few of these videos with the ATS, you should know by now that I always trade exactly the same way, following the system's three different tools to basically construct a complete trading plan. So it all starts with a trading signal. Let's take this one, for example, on RTY, on the Russel 2000 futures. So we got the ATS gave us a short signal at the close of this bar here, right? We always wait for bar closes to confirm our signals. And then once that happens, we place our trade at the low of the bar, and then our stop loss always needs to go just above the most recent swing high. In this example here, that's for a short trade. If you're taking a long trade, it's exactly the opposite. So that's what gets me into the trade. Okay. Now, how do I manage a trade once I'm in? Well, that's exactly the same way as with all my other trades. I use the dynamic profit levels as my profit targets. These are these horizontal blue dotted lines that you see on the chart. These are automatically added to my chart. They're basically calculated with using the volatility, the recent volatility of whatever market and time frame you have open on your platform. So in this case, personally, I like to scale in fourths of my position. So let's say, just for simplicity's sake, that I bought here 4 contracts, or I shorted here rather 4 contracts of the Russel 2000. As soon as price hits my first dynamic profit level here, I will be covering or I will be exiting 1/4 of my position. So that means I will be covering 1 contract of Russel 2000 for a profit of about 17 points in a single contract. And then I'm basically waiting. I'm waiting for the next time that a dynamic profit level is being hit by the price. That happens about 3 days later, right here. So my next exit basically happens at this location right here for a profit of 79 points on the Russel 2000. Again, I'm covering 1/4 of my position, so that's 1 contract. And then exactly the same thing happens again. I'm waiting. At this point, I have 2 contracts left, and I'm waiting until the next dynamic profit level will be hit. It happens right here. And at that point, I will be covering 1/3 or 1/4 of my position for 142 points on the Russel 2000. At this point, I have taken profits here, and here, of course, as my last fourth. Now, I'm still 1 contract short, right? I shorted here 4 contracts. I covered 1 here, 1 here, and 1 here. The last piece of my position, I always leave my last piece to run for as far as possible, because in this trade, or in every trade, nobody knows what's going to happen, right? I shorted here. Maybe the market just has a complete meltdown, maybe just a very sustained long-term downtrend, and maybe we see it, trend like this, and then it goes lower and lower and lower. Now, I don't know where the bottom will be, right? Nobody knows. So I like to keep at least a quarter of my position on in the event that we have a large move in the market, and I want to be short for that. I want to be profiting from that, right? We're trend followers here, and that's basically what we're trying to do. Go with the trend and stay with the trend for as long as possible. So yes, I am using these targets to get paid, right? as prices are going down. I like to scale out, but I'm always leaving a quarter of my position in the event that a very large move occurs. And that didn't happen in this case. Instead, I got a buy signal by the ATS, and at that point, I'm exiting the last quarter of my position at this location here. Okay, so that's basically how I would manage this trade, exactly the same way as in all my previous examples. It's really not a complicated system. Basically, you're just following the rules and following the different tools. So that's for the short trade. Now for the long trade, it's exactly the same way. I'm not gonna bore you with the details, but basically, we got a buy signal here at this bar, the first time that the ATS changed its color from red to blue. That change occurred on this bar here, on the high of this bar. Again, the stop loss needs to go just below the prior swing low, which is right here. You can see how price moved up, down, and then up again. And that's when it gave us our long signal. So my stop loss needs to go just below this prior swing low. So that's for my entry. And again, I'm doing exactly the same thing that I did in the short side. I'm doing it for the long side. I'm taking profit here, my first quarter. I'm taking profit here, so I'm selling a contract when we hit the first dynamic profit level. Notice that these dynamic profit levels do not change very often. They're only changed automatically when there is a significant change in the volatility of the market in the specific time frame that you're looking at. So in the 30-minute chart, if there is a drastic change in volatility, let's say, for example, we're going from, we have a shift in volatility from, these large swings. Maybe we go in a period of sideways moving price action that doesn't really go anywhere. Well, if that happens, the dynamic profit levels will contract. So they will be closer together to reflect that change in volatility. But in any case, I'm taking 1/4 of my position off here. So I'm getting paid at that location for, what's that, 58, 59 points. My second exit is here. And I'm still in that position because the third dynamic profit level has not been hit yet. So I have taken profits in half of my position. And I'm keeping the rest for either a new short signal to the downside by the ATS, or if we hit the next dynamic profit level and the price can continue higher from that. And that's basically it. Notice how one last thing I want you to notice in this chart before we move on to gold futures is I want you to notice how the dynamic profit levels very often can act as rather strong support and resistance levels. We can see it here. For example, we see price hit the DPL for short dynamic profit levels. It hit the DPL and then it bounced several times, right? And you can see that happening very often. The most obvious example of this happened right here. We hit the DPL and then price just found its bottom and moved higher. You can see it also here. Let me just remove this. You can see it here, how price moved up, bounced, moved above it, bounced from the upside, and again here, right? So these DPLs, I'm not using them for no reason, right? I use them because I know that they have the power to change the direction of the price. So for example, here, when I was long, I knew that any of these dynamic profit levels could potentially act as strong support. So whenever we hit them, I like to get paid there. In the event that that the dynamic profit levels change the direction of the trade, which they did right here, right? So that's why I use them as my take profit levels. Every part of the system has a very specific reason for being there. It comes after years of back testing, years of forward testing and live trading. So every component is there for a reason. You can also see it here. We bounced on the dynamic profit level, also here. And right now we're bouncing again, right? But we're still in this trade because we still have 2/3 of our, two quarters of my position still on. So that's for the Russell 2000. Let's move on to gold futures. This is a completely different time frame. I like to show you different time frames. We had a look at the 30-minute time frame, which is a longer time frame for swing trading. But of course, I trade all sorts of time frames because the AutoTrend system works exactly the same way. So I like to have this type of diversification in my trading, where sometimes I day trade shorter time frames like the 5-minute chart. Sometimes I like to do longer time frames like the daily chart, and most of the time, I'd say 90% of the time, I have multiple positions open. So I have one account, let's say I have one account for my longer term trading on the daily chart, and then I have another very short term account where I do my day trading. And this is an example of that. This is gold futures 5-minute chart, and you'll notice here there is a third component of our system comes into play. That's the trend validator. When I day trade shorter time frames, such as the 5-minute chart, I always like to know what the higher time frame's trend is. And that's when I use the trend validator. For example, I have here the 5-minute chart open. When I get a new signal to go long, as it happened right here, that's highlighted. So when I get this new signal, I need to know what the higher time frame is doing. What is the AutoTrend system telling me on the higher time frame of gold futures? In this example, I'm using the 1-hour time frame. So what this blue color here tells me is that gold on the 1-hour time frame is on an uptrend, and it has been on an uptrend for some time, right? So that gives me the confirmation I need to take this long signal on the 5-minute chart, knowing that basically we're going back up towards the direction of the hourly chart. So we have this kind of confluence that our short-term signal is going in the direction of the higher time frame chart. In other words, we're going with the flow of the trend across different time frames on gold futures. We're going with the tide, we're going with the wind as opposed to against it. In contrast with that, if the trend validator here was red, that would signal to me that the long-term direction of gold futures at that point in time was to the downside. So when I get a buy signal, then I know that this long signal will be fighting the higher time frame trend. In other words, that would be a lower probability trade. Whenever you're fighting trends, you have lower probability trades. So I like to compose my trades using different levels of confluence. One way is to use the higher time frame to guide me in taking trades in the lower time frame. And that's exactly what we did here. We got our long signal. On this bar here, that's the first time that candlesticks changed from red to blue. That's our signal to buy. So my entry would have been on the top of the bar. And the stop loss now needs to go below the prior swing low. In this example, right here. You can see how prices moved up, right? Up, down, and then up again. So that was the last time that we had a swing down before we got our new long signal from the ATS. So my short signal, my stop loss needs to go there. My first profit target is, of course, the dynamic profit level. The first time that price hits a new DPL, which happens here, right here. Okay. Again, notice the strong resistance that the dynamic profit level presented. Price could not move past the DPL at that point in time. Instead, it moved lower. Where? Well, of course, to the next DPL, to the lower dynamic profit level, at which point it found support, strong support, moved higher. Again, we have a little bit of resistance from the dynamic profit level, a little bit of a sideways movement. Well, that basically lasted the entire afternoon here from 12 o'clock or 1 o'clock Eastern until 10 p.m. At night. And then we moved higher. We hit the next dynamic profit level here, which of course provided some resistance. At that point, I would have taken my second profit for this trade. So I'm selling another quarter. And at that point, I have 2 quarters left. And we found our next point of resistance when the next dynamic profit level was hit right here. And that's exactly when you can sell another quarter of your position at that point, keeping a last quarter for in the event that gold futures just go crazy and continue into a massive uptrend. That didn't happen in this case. In this case, of course, it's not going to happen all the time. In fact, it is more rare, but it happens. Then that's why you need to be prepared. In this specific case, we got a new sell signal right here. And at that point, I'll go ahead and exit the entire position. So I got paid several times in this one. And then the final piece got stopped out, of course, for a very good profit. Now that was about, how much was that? For 43 gold futures points. So that not bad for this trade. We got a short signal here. Now, do we take this short signal? The answer is no, because the long-term trend is blue. The trend validator tells us here that the 1 hour time frame of gold futures is going through an uptrend. So taking this short signal will be going against the longer term downtrend, and we don't want that. We don't want to be taking signals that are going against the higher time frames trend. So that one is skipped. So I'm focusing on this. And then just a few minutes ago, just before I started making this video, we got a new buy signal for gold futures. I didn't take this one since I've been busy making this video. But if I wasn't doing something else, it's very likely that I would have taken that signal because it fits the system's parameters, right? All of the criteria was met for a new long signal on gold futures. So that's basically it. That's how I trade futures. It's really exactly the same way I trade everything else, but it's important to make these videos to show you my thought process step by step when using this system. It's rather simple. Of course, for me it's simple because I've been doing it for so long, so I know how it works. So I like to make these videos to show you different market environments, different time frames, different markets entirely, future stocks, Forex, and so on. The strategy really never changes. It's really just following the rules. So I hope you found this video useful. If you have any questions, let me know. I'll be happy to answer them. And yeah, let's have a great start to the week. Thanks for watching and take care.